CNBC-TV18 News confirmed life insurance companies surge after the insurance regulator IRDAI approves graded surrender value rules, which imply largely unchanged or lower rates for policies surrendered up to 3 years.
Mankind dips nearly 3% after 1.3 crore shares worth around 2,750 crore rupees change hands. Page Limited, an affiliate of private equity firm Chris Capital, is likely to be the seller. The stock has come off the low point of the day.
Interglobe Aviation surges after brokerage firm UBS increases the target price from 3,900 rupees to 4,000 rupees a share, citing strong growth prospects in the aviation industry. The stock hits a fresh high today.
Avenue Supermarts climbs nearly 5% after brokerage ICICI Securities upgrades the stock from hold to add, raises the target price to 4,800 rupees from around 4,100 rupees, citing the possibility of growth outperformance the peers.
Hindustan Aeronautics up nearly 3% as the company's bagged a near 200 crore rupee order from the Guyana Defence Force.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangala Malu. Well, as we speak, the market's a little under the weather. The Nifty is down close to 40 points, but the story is not out there. You look at the broader markets, your portfolios will be feeling good because the mid-cap index is doing a relative outperformance. That's up close to around 0.5%. Though the advanced decline ratio, well, that's still in favor of the number of stocks declining. Mangalam, volume still on the lower side, given that we have only 3 sessions this week. But I think we're in for a bout of consolidation. Maybe when the new year begins, that's a new financial year, we'll get up and about.
Nothing really to worry, Nigel. You know, the market's just biding its time in this 3-day weekend. And the good part is that the Nifty is holding on to important levels. 22,000 holds on. The Nifty bank is also hovering around that 46,700 mark itself. And periodically, we do get bumps from the lows as well. As you can see, we're still in the red, but marginally off the low point of today's trading session as well. The market's biding time. Let's see whether in the next couple of days or so we see some bit of up move in the mid-cap end of things, largely because it is, like Nigel pointed out, the last week of this financial year. So could there be some sort of NAV propping coming by in stocks and sectors that have outperformed this year so far? Well, let's see whether that happens or not. But for now, with the market in this range, what should you be doing with your trade positions? Shilpa Raut of Prabhudas Leeladhar joins in for a quick technical check. Shilpa.
Good morning, Nigel and Mangalam, and thank you for having me on the show. Rightly said, indices are a little on the subdued side. I won't say on a weaker note, but a little subdued because of the long weekend and the year closing. But whatever it is, we have seen that the range for Nifty is very well placed in between 21,750 to 22,300. The 600 points of movement will be, likely continuing also for the coming week, where we see some selling pressure on the upside and then buying coming at on the lower side. So till then, if the range is not breached out on either side, one should ideally play this. Talking about Bank Nifty also has a good support at around 45,800, and until and unless we breach past 47,500, I would again say this is a sideways move for the index. This can continue also for a while. But the interesting thing is that the pre-rollover data shows Bank Nifty at very strong levels, already 67%. Done already, which means that there is a lot of activity happening in the index, and with all the heavy weights almost at crucial support zones or moving sideways, any sort of positive bout here can see these stocks soaring high, and in turn the index will also be moving towards 48,500 to 49,000.
Okay, got it. Well, that's the view on the index. What about individual stocks? What do you have for us?
I have 2 buys, Nigel, for April series. For the first one would be a buy in Metropolis. Metropolis has a very strong option chain suggesting that 1600 is looking at a good support, and from here 1800 to 1850 can happen. So I've recommended the same in Prabhudas Leeladhar today as a Hero Zero trade for 1800 call option. That can be done. Otherwise, also on every decline towards 1600, the stock can be bought with a stop loss of 1580 and look for targets of 1750 to 1800. The other one would be a buy in Voltas. Voltas also has a very strong, data setup. Once past 1100, you will see a strong move towards 1180 to 1200 zones. So Voltas also is one stock I would like, to keep on focus.
All right, Shilpa, since we have you with us, was wondering if you have a view on any of these gas stocks, because as we speak, GAIL has spiked to the high point of trade. Giving it company at the day's high is also Gujarat Gas. So the intraday charts of GAIL, Gujarat Gas, and the third one is Petronet LNG. All of them have moved higher, about 2.5 to 3%, but it's an outperformance as compared to the other parts of the market right now. Is there anything that is chartically speaking to you from these gas and energy related stocks?
Actually, Manglam, yes, GAIL is something that I've been looking since Friday session, and I've given a bull call spread also for April series, wherein one can buy 175 call option and sell 195 call option. So the net outflow for you would be around 7.5 rupees, but the maximum gain scenario is around 13 to 14 rupees. So that is how you can play this stock as well. GAIL has a very strong setup, supported around 172, 173 zones. So until and unless we are holding this, we are sure that stock will move towards 195 to 200 as well.
And do you have a view on Indian hotels? Long weekends, two long weekends in this week itself. My colleague Nigel did travel during the long weekend. Your thoughts? A lot of people, I'm sure, are making plans. And I just checked online. The hotel rates are extremely expensive. The stocks moved higher. Is there a call there?
Yes, of course, Indian hotel also, if you look at the charts, you see that 550 is a very strong support. From here, the move towards 595 to 600 can also happen. Like you said, a long weekend and a lot of traveling happening, which is why we also see the airlines, gearing up to that, soaring high. So from here, I guess Indian hotel is also chartically and very favorable risk reward for move till 600.
Thanks a lot for that. And pleasant travels in case you as well are moving out. So wish you a good week ahead. Well, let's move on then. Let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Anand Chaudhary of moneycontrol.com joins us to talk about a stock that he's tracking closely. Anand, take it away.
So today's stock idea is Blue Star Limited, which is a leading heating, ventilation and air conditioning company. The company has strong presence across 18 countries, including Middle East and Africa. It enjoys number 1 position in ducted air conditioning system and number 2 position in VRF and chillers. The company warrants attention due to multiple factors. Number 1, the air conditioning industry is rapidly growing in India, and it is still underpenetrated compared to the global markets. It is a 9 million units market in India compared to 80 million units in China. Factors like urbanization, higher incomes, and changing lifestyle will drive demand going forward. Second, Blue Star has recently commissioned a new facility in Sri City, which has increased its capacity by 1 million units. It is also setting up a new facility in Vada for 2 lakh deep freezers and 1 lakh water coolers. It is expected to reach market share of 15% by FY25. Lastly, the electromechanical products and commercial AC business has an outstanding order book of 6,000 crore, which is expected to be executed in the next 24 to 30 months. Stock is trading at 56 times on FY25 earnings. Key risks for Blue Star is rising competitive intensity and slowdown in the consumer demand.
All right, that's the stock, which is an idea for profit from our colleagues at Money Control Pro. With that, we'll step into a short break. In fact, take that break, come back, and we focus on a lot of these individual stocks which are moving around. Stay tuned for that. Morning off lows from the market, still with a cut of 70 points for the Nifty. Just keep an eye on Britannia. That stock opened with a cut of about 2.5%, has recovered about 3% from the lows. For most of today's trading session, Britannia was in the red and now just inched marginally into the green. So that is a stock that has recovered alongside all the other stocks which have also moved off lows. L&T, case in point, which has moved towards the higher end of today's trading range. But definitely the stars of today's trading session have been the life insurers, and that after there has been some clarity which has come in, a relief from the insurance regulator, which has approved graded surrender value for these companies. Yash joins in with more details on this. Yash, we had an inkling.
Well, that's correct, Mangalam. We've been reporting on this one for quite some time now, and that's exactly how it's turned up. A big overhang out of the way for life insurance companies, with the clarity coming on the surrender value regulations and clarity coming in favor of these life insurance companies on surrender value. Do remember that in December 2023, the regulator had proposed increasing the surrender value, and it was a significant increase, almost 2 times of what exists today. Since then, life insurance companies had been under pressure, specifically HDFC Life and Max Life, due to their higher exposure to non-par segment. Now, finally, as we had reported, clarity has come in on surrender value. And if you see IRDAI's final regulation, the regulators proposed a graded surrender value proposal, which means higher the duration for the surrender, higher would be the surrender value, and lower the duration of the surrender, lower would be the surrender value. As far as the first 7 years of the policy are considered, the surrender value largely remains same as it exists today. And the interesting part is that most policies get surrendered in the first 7 years itself, which means for life insurance companies, the impact on their VNB margins is expected to be nil or very close to that neutral point. I'll just give you some numbers in terms of what has been the proposed surrender value, which has been given by the regulator. 30% when it comes to the second year surrenders, 35% in the third year, 50% between the fourth and the 7th year, and 90% for the last 2 years of the policy. Now just look at these comparative numbers in terms of what has come out for surrender value in terms of IRDA regulations and what was proposed. In the second year, what was proposed was on a 1 lakh per year policy, 83,750 to be the surrender value. What has come out is just 30,000. Similarly, for the fourth year, what was proposed was 2.5 lakhs. What has come out is just about 1.5 lakhs. For the fifth year, what was proposed was 3.35 lakhs. What has come out is just about 2 lakhs. Sixth year, 4.19 lakh was proposed, and what has come out is just about 2.5 lakhs. So significant watering down of what was proposed in terms of higher surrender value becomes a big positive for life insurance companies. HDFC and Max Life to be the biggest beneficiaries of this relaxation. Max even more because of valuation comfort there.
All right, Yash, thanks a lot for that. Well, let's focus on Adani Ports then, which is set to acquire 95% stake in Gopalpur Ports. Hormuz is here to tell us more about this development. Hormuz?
Well, another acquisition coming in from Adani Ports, and this time it is of Gopalpur Ports. As you highlighted, the 95% stake will be acquired for a cash consideration of 1,350 crores. The deal implies an enterprise value of 3,080 crores subject to final adjustments, and the transaction is likely to be completed in the first quarter of FY25. Now, the 95%, the stake that they have acquired, 56% of that is from SP Port Maintenance, which is a Shapoorji Pallonji Group unit, and the other 39% comes from Orissa Stevedores. Now, in FY23, the Gopalpur port handled overall cargo of around 7.4 million metric tons and has an overall capacity of around 20 million metric tons, and that number in FY24 in terms of cargo handled is likely to be around 11.3 metric tons, and it is likely to earn operating revenue of around 520 crore rupees. The management also said that they have already identified opportunities for achieving higher operational efficiency and infrastructure debottlenecking, which implies further value creation for Adani Port shareholders. Now, for the month of February, Adani Ports had reported a 33% growth in cargo volumes. For the first 11 months now, they are at 382 million metric tons, and they mentioned that they are on course to surpass their revised volume guidance of 400 million metric tons as well. Now, this Gopalpur port could add about 25 MTPA of further capacity. So, the stock, another positive development there for Adani Ports. The stock is up and about in today's session.
Stock is up and about. The other one which is taking off right now is Interglobe Aviation's literally up around 2.5%, open slightly subdued. Then there was a big move that we're seeing, and which has taken the stock itself to a fresh 52-week high. A brokerage note has come in from UBS, the target price increase as well. Sonal joins in with more details. Sonal, we were talking about long weekends and a lot of travel. Indian hotels was doing well, but seems like a lot of people are flying as well.
They're flying, and Interglobe Aviation's management is meeting analysts as well, and that's the reason some of the takeaways which the street has liked for sure. In fact, the management said that they will be doubling by calendar year 2030, and this will be via more planes, more destination routes, including international geographies as well. They say that fleet addition continued with 8 more planes added to the fleet in Jan and February of 2024, taking the total fleet to 366. In fact, going forward, FY25 should see 1 plane coming per week. Now, that's a big addition that they're talking about as well. Management believes that recent slowdowns in passenger numbers, as per the website DGCA, that is, it is more because of supply rather than demand, because demand continues to be strong as well. New airports in Noida and Navi Mumbai in calendar year 2024 and 2025, that would be the one which would aid volumes going forward. The new guidance for FY25 for ASK, which is average seat per kilometer per passenger growth, is at around 11 to 12% according to the management. Now, Jefferies in the back of this has upgraded the stock to a hold from an underperform. They've upgraded the yield estimates by 2%, the EBITDA estimates by 14 to 16%. Motilal Oswal, however, reiterates their neutral rating on the stock with a target price of 3,510. They say competition in the sector is expected to intensify with the resurgence of Air India and one more entrant in the sector, and that's why they continue to remain neutral on the stock.
All right, Sonal, thanks a lot for that. So that's about Interglobe Aviations. Meanwhile, I'm looking at Avenue Supermarts, that is DMart, where ICICI Securities has upgraded the stock from hold to add. They've maintained their hold on Nestle. In fact, what they do believe is that DMart will outperform Nestle in the medium term. Importantly, they've upped their target price as well from 4,100 to 4,800 rupees, citing a lot of the negatives already in the price. And as a result of which, they've upped their target price on DMart from 4,100 to 4,800. Why the Nestle comparison? Because over the last couple of years or so, DMart's premium over Nestle, which is the most expensive FMCG stock, has come down from 50% to 8%. This is largely on account of Nestle's outperformance and DMart's underperformance as well. And now they believe that the scales have tilted in favor of DMart. And that explains why the stock is up 4%, Nigel.
All right. Well, that stock is flying away, a big outperformer in today's trading session. There's a whole host of stocks that are reacting to news flow that came in early this morning. For the time being, though, we'll take a short break. You come back. We'll continue our focus on markets. We'll also tell you a lot about stocks that are moving around. Welcome back. You're tuned into Chartbusters. You're on CNBC-TV18. By the way, keep an eye out on Oil India. That stock is breaking away. Now it's up close to 5.5%. So big up move is what you're seeing out there. And ahead of those summers, it appears that Voltas is seeing some pre-buying because that stock as well has seen a good spike in today's trading session. But let's get into some exclusive market conversation now. My colleagues will be caught up with Mr. Ramdeo Agarwal, the joint MD of Motilal Oswal Financial Services, to talk about the market trajectory, how should one look at market corrections, and also the rise of the equity cult in India. Let's listen into excerpts of that conversation.
See, there is a thing called Anulom Vilom in yoga, isn't it? You keep breathing and then you have to breathe out also.
Yeah.
It is necessary. Yeah. If you don't breathe out, can you keep breathing up?
No.
You cannot. Markets are like that.
Yeah.
Every stock, every sector has to breathe up, and then after a big rally, you have to have a good correction. Sometimes corrections are immediately after small rally.
Sure.
Sometimes it's after big rally. But correction is extremely necessary, essential part of the stock market movement.
True.
You have to take it for granted. And that is why it is called risk asset. It can be up, it can be down. Sure. And that is what is not being liked by the investors at large. You have to understand it is integral. These are quotational losses. The corrections are quotational losses. They're not losses. They are quotational losses. You have been overpaid. 100 went to 200. You have been overpaid. Don't take it, you are paid. You are still in the stock. You should have got only 160. So 200 has to come to 160. But it will not come to 160. It will come to 140. Because market doesn't have very precise way of giving a price. It is very approximate machine. It will go 5 steps up, 4 steps back, then again 7 steps up, then 4 steps down, like that.
So, recently, in the recent past, words like froth, etc., were being used for the broader market, mid and small cap. Do you believe that there's
of course
this
it was
froth?
there.
And do you believe more correction has to
see,
happen?
what is happening is, you must understand the factors driving the market right now. Factors are the number of investors which are coming in. After 75 years, first time we are saying celebration of retail investing or celebration of stock market. Okay, thanks to digital infrastructure, thanks to KYC norms being eased out, and generally the mandate by government that capital formation in the country is extremely important for the sustained growth in the future. Okay, now that equity, see, for a country to grow or enterprises to grow, job market to grow, you need enterprises to grow. Enterprises will grow only if you provide them adequate quantity of equity capital to start with at reasonable prices. And then debt capital is there. If once you have the equity, then you have the debt. But without equity, there is no debt. So the show doesn't happen. So clearly, this is happening. We are getting about 4 to 5 million customers every month. And this is a record. From 35-40 million in 2020, we have reached last month 150 million. I think we are headed straight to 300 million. 300 million, and then it's a revolution. And it is not going to happen overnight. It is going to take 3 to 4 years. And then after that, after 300 million, let's first reach 300 million. Then we'll talk about 600 million. Okay. Now what is happening is the pace is accelerating. Instead of going down after 4, 5, 4 and then 3.5 and 3, it is actually going from 3 to 4 to 5. And now, let's see, we have done 4.65 max. I don't know what is the number for March. But my sense is now, initially there were only 30-40 million customers satisfied. So they were bringing their brothers and sisters and all. Now 150 millions are satisfied. So the whole society after society is coming in. Like the whole city is coming, whole township is coming, whole building is coming. So now there is a lot more movement and acceptability of the concept of investing some portion of your savings. See, last year, between in 23-24, as of this Friday, the number came, we have collected about 17 lakh crores of fixed deposits. Bank deposits have grown by, I think, 13% and 103. So I think 17-18 lakh crores have come. I think stock market must have got during the same period about 3 to 4 lakh crores, maybe 5 lakh crores. So only 1/4 or 1/3 of the fixed deposit. That is not the right thing. Eventually, it will become almost equal. But that may take 5-7 years. So it is we are into midst of very huge market, what I would say, savings allocation change in the economy. And this will happen, it will take time. And economy has to also perform.
All right, interesting conversation as always with Ramdev Agarwal as we speak. Not too different from where we started the show, but the only thing that is doing well is the mid-cap index, which is above the top of my head, holding up with a gain of almost 0.5%. One would like the market breadth to move more in the favor of advances as well. With that, it's out of time for this edition of Chartbusters from Nigel and me, the entire team. Thank you so much for watching. We have Trading Hour coming up next.